But what is important to understand is that on the trend, the dotted white trend, this is where the most probability occurs. That is, it relates to the Gauss belt, where the middle area is the 66% of the trend. So that is representing the white line. In other words, there is a 66% chance that the price actually fluctuates around this price. It doesn't mean it's going to be 721 as it says there. It means it has 66% probability of being in that range. But there is still a 5% probability that the price eventually jump into 5,000. That's what Monte Carlo simulation beauty adds beauty to this calculation, because it will add up all the extreme cases. But also you have to understand that these are lower probability scenarios. So that's pretty much it. We can play around with these ones, for example, with other stocks, or changing parameters like the MNAV. What happens if the MNAV of MicroStrategy actually jump to 3 and the Bitcoin KVAR goes to 50%, let's say, keeping the old parameters the same. See, now the prediction changed because now you have data. And by the way, all of this information is updated dynamically, which means for some reason, in the next month, the Bitcoin price jump to 500K, all of this data will eventually readjust to the new price point data, right?
Hello, today I'm the Bitcoin libertarian, and we have the other Bitcoin libertarian. I'm always talking about us when we talk about the podcast, about the streaming, because I have here my friend and my business partner, Diego, that is going to be joining in our call. And also I have Marco as every Sunday. How are you guys?
Very good. Happy to be here, and thank you for having me and open up to discussions about Bitcoin and Treasury companies with Marco and Fernando.
Yeah, for me, I'm very happy to be here as usual, Fernando. Thanks for hosting me for this weekly update, and also to have met Diego. So great. And hopefully we have a nice conversation again on Bitcoin, Treasuries, and all this amazing ecosystem.
Excellent. So where do we start, Marco?
Yeah, I think maybe also like just to start about some sentiment vibes, and I want also to know from your perspective. I think we all kind of expected some kind of downside pressure on Bitcoin from seasonality in August and September. I think I don't know, for some metrics, also on technical analysis and on some price action, I think we had this correction, and also on general sentiment. I think now it's more let's now see the Fed, and let's now see the potential rate cut, and the monetary expansion. I think it's kind of positive from now on. I have this this feeling now, whereas I was a bit down on July and August. I think September is kind of a fresh start, I would say. So do you feel it as well from your perspective? Then maybe the worst kind of correction is on our back.
We have some graph to show that part about the famous rectangle. We actually calculate the variations in the Bitcoin price average along the years, and yeah, obviously September and the month before we have a negative returns, but we can see it later on the graph with some real numbers to see that it's not as bad as it might look, or maybe as bad as the people in Twitter might say about rectangle. In fact, for the first 2 weeks, we haven't seen such a correction. In fact, it's been positive so far. So, but let's back it up later with more data.
Yes, today I was checking, the price went up. We crossed 116 again from since long time. And I was checking in the morning, I was watching the Pompliano podcast, and Pompliano is super bullish. He's not saying that this September is going to be as similar as the other Septembers where the returns were not good. We have the Fed, what is happening on this week. So let's see what happened. We see a good trend in September, but yeah, Diego later will back with data.
Yeah. And it's more, kind of general sentiment, and also seeing we will see later, but also on the short term with the moving averages, and in different time frame, from the daily, from the weekly, it seems to be kind of the market participants are kind of getting a consensus that maybe it's time for the next leg up. I don't want to. I mean, nobody knows, but it seems positive. So yeah. Yeah, maybe then we can move on the equity, on the Bitcoin equities. That again, I think they are suffering in terms of price action, and a lot of people, investor are I don't know, a bit frustrating lately, because we see a lot of those small caps and those small treasuries that they went up crazy in the last months, and now they keep bleeding, even though Bitcoin seems to be found in a floor price. And so I feel a bit of downside and fear, and a bit of uncertainty on those communities. And for some of them it's kind of normal, because we always said that those companies are like small. They need to raise the money, they need to find new ways to attract new capital, and some of them won't be successful as as the strategy of Sailor, or the Meta Planet, or the other that we know. So maybe I can share the screen on the Bitcoin Treasury website, just to give a brief update. Let me see. Can you see, guys, the screen?
Yes.
Yeah. So I mean, first of all, we need to celebrate that the top 100 companies now have a Nakamoto stack, so 1 million Bitcoin for the top 100. And I think if we just stop here, it's remarkable, because what Sailor started in 2020, and in just 5 years we have a new industry. We have companies basically from all over the world that try to participate into this new Bitcoin rush. We have company from, majority from the US, but we have also from other geographies. And in fact, we can see also this amazing chart here, in which we can see majority of entities in the US, but we have also a lot of movement in Canada, in Japan, as we know. And I monitor this data, and every week by week we always have more companies, we have more accumulation on Bitcoin, and we have even more countries joining the party. So I want also to hear from you guys, but I think um, it's amazing that this that we are like getting bigger every week, and I never see so far anyone withdrawing from Bitcoin. A company that started the treasury and then they say, no, I just sold it and I exited. So far has been very consistent, and week by week, months by months, we will see much more coming in. So I think is incredibly bullish for Bitcoin.
Yes, I think so.
It's, a- it's,
I'm
a-
so.
it's
Yes, go
amazing
on.
that it happens in less than a year, because this trend of companies starting proceeding with the strategy, it's been only for 1 year. And in this website, we only have listed companies. Imagine the stack of private companies that are not even information that we cannot even search on the internet or find publicly. I guess at some point, someone is going to come out with something like that. But I wouldn't be surprised if there is another million Bitcoin held by just private companies.
Yes, I think that you can list your company if you register in the bitcointreasuries.net website. You can put your company and you can put how many Bitcoin your company is holding. And one of the strangest thing and the funny thing that in the top 5, the fifth country or region with most Bitcoin treasury companies is Hong Kong. You see, United States, Canada. I don't remember who was the third one. Japan
Sorry.
probably, and then Hong Kong.
Yeah, Hong Kong 12. Yeah.
It's surprising. What do you think, Diego, about that?
It's surprising because on the day-to-day in Hong Kong that we are living, you don't see that happening. You don't see people actually knowing what Bitcoin is. We have a lot of talks with people who work in traditional banking here. And the answer is, I simply don't know what it is. I feel like I'm left behind because I don't have any knowledge. And this is at levels of financial advisors. It's not like only random people on the street. Many of the jobs in Hong Kong are about doing financial advisory, and these people don't even know what Bitcoin is or how to treat it or anything. Still, yeah, there are a few companies that are holding Bitcoin. I'm not sure if they're actually doing a strategy, but it's just a buy and hold kind of thing so far.
Yes, I think that what the website is listing are the companies that are holding Bitcoin in their balance sheet. From this company, we need to differentiate which of these companies are just buying and holding, and which ones are really buying Bitcoin and doing the strategy of Sailor. Which ones are raising debt, raising capital, doing the ATM in order to buy more Bitcoin and create this Bitcoin per share, increasing the Bitcoin per share value.
Yeah, and yeah, I think we will see now the diversification also of those companies on because we started by saying this levered play, so the LBE. Then we started to move on the BTC, TC, so the Bitcoin treasury companies. I think we will have different segment and differentiation of those companies. And to be honest, what I want to see more is legit businesses with good cash flow, with a real business model, with real operation, etc. And with the founder or with the CEO understanding the problem of the fiat decay on their balance sheet, and they decide to conservatively maybe swap a portion of their own cash or cash equivalents from the balance sheet into Bitcoin, and maybe set up a cash flow operation monthly with conversion into Bitcoin. So I want to see more real business, real companies doing this, because for me that would be the easiest way, and also the better way for self-sustaining those companies in the future. I cannot expect uh, many other strategy type of companies. I think we already reach some level of size in different geography already, because we have the US and the Great West with strategy. We have the UK and other with the smart web company. We have maybe in Europe we can argue Capital B is like kind of trying to follow similarities. Then we have in Japan Metaplanet. So I think already cover some of the jurisdiction and the geography. What I want to see more is normal companies understanding Bitcoin, and then probably the difficult part here is to educate and to give time to take some level of, for them, risk to allocate the cash into Bitcoin. And for us, it's not risk. The risk is keeping the cash, especially if you have, taking fee, especially if you have more than you need to cover the OPEX, or to cover the extraordinary expense, or to cover the day-to-day activity. So I think this needs to change in the mentality for entrepreneur and business operator.
But I think it's normal that it came from, sorry, Fernando. It's normal that it came, the first adopters are companies in struggle. If you are Microsoft, Apple, Tesla, you don't need it. You will keep going with your operations. You will keep generating your cash flow. You will do buybacks until the whole system explodes in your face. And for that, we still have many years ahead. So it's not going to happen from companies that are well established. It's going to come from companies like Strategy. When you are with your against the wall and your last opportunity, it's Bitcoin. These are going to be the adopters. And similar thing happened with Metaplanet, or mostly all of the companies that you listed in we saw on the website are usually struggling companies. Same happened with at country levels. The first country that adopted Bitcoin was El Salvador. It wasn't Switzerland. It's not going to happen. So I think that's a normal path where we will see struggling or smaller companies adopting Bitcoin. Then the bigger one, like Strategy now, developing some new tools or some new strategies, guiding the other ones onto what is the best, the most efficient path into a Bitcoin yielding. And from there, maybe eventually in 5-10 years, the bigger companies with real cash flow will adopt Bitcoin. But I think we are still many years ahead of that.
Yeah, I think that we are super early and we need a lot of new financial tools to make the companies go and start stacking Bitcoin as a reserve. Because I think that for this to happen, we need, first of all, the CEO of the CFO of the company be a Bitcoin, I don't say maxi, but at least a person who understands the value of Bitcoin, the cycles of Bitcoin, understand the allocation that they have to do, and also again understand probably Bitcoin as an asset. And now when we have more companies that can borrow against the Bitcoin, I think that this can be done. And also, what I want to start seeing as well is companies holding stocks of treasury companies, because sometimes for small companies or for different jurisdiction you cannot buy the Bitcoin, but it's easier to buy the stocks of a treasury company. I think that this is something that I want to start seeing, and probably we will see in the future. I don't know what you think about.
Me personally, I think it's not very easy to implement or to justify to a shareholder eventually that you have on your balance sheet something different from your own stock with a buyback, or with some kind of treasury, which is the standard and the norm, or eventually cash because you need cash to and it's normally accepted. I really struggle to see, a CEO or in a company mentioning that from now on they decided to add some other stock. I think also it's limited by law, because also Saylor said multiple times that there is, especially in the US, if you're a public listed company, you have a maximum of 40%, up to 40% that you can have in your own stock or other stock. If you have more, you will be classified as a financial institution. You will follow other rules, etc. That's why Bitcoin is so crucial, because it's not equity, it's a commodity. And so I think what you said, Fernando, is possible maybe in some smaller jurisdiction, maybe in which maybe the regulation is not as well defined or well in detail as in the US. I think in the US and in major economy, we will see more maybe the ETFs. So you have these easy going financial vehicles in that is pure 100% exposure to BTC, very low fees, and I will always argue that having Bitcoin spot in cold wallet is the asset with the capital letter, but for most operator and for like a different generation, is much easier to have uh, this kind of proxy. So yeah, I would envision the future with much more Bitcoin ETF on those balance sheet. And me personally, I cannot see a real argument for adding a different treasury company if I have a strong balance sheet. That's my view on that.
I think it might be useful in the cases of private companies, not at the listed companies level, right? If it is you are just a small listed company struggling with your cash flows, maybe one similar strategy to what strategy do in the public markets with Bitcoin could be to increase your balance sheet by leveraging on other listed companies that are holding Bitcoin. So it looks like at the end of the day, it's a more risky game, of course, because you're leveraging on top of another company. So you're adding there different levels of risk. But if you can prove that the company that you're holding, it's increasing the returns on Bitcoin, then it might be justifiable for some small company in the private market. I think that's more of the context where this could happen.
Yes,
And guys, no, sorry, Fernando, go ahead.
no, that's what I didn't mention that probably that was for small companies and not listed companies doing this kind of strategy. Leverage with these companies, of course, is riskier, but sometimes the small companies you have more option, you have more space to move instead of a private. If a public company with more regulations, you need to adapt. So that's my take on that.
And I like another, and I think that Chuck Mollers usually say that is for smaller companies, if you need to justify a new hiring, for example, for a new project or new development in your company, and you have to hire a bunch of people, software, or any other assets, whatever you are trying to do on the investment side, you have to now justify that that investment is going to be superior to the hurdle rate of Bitcoin, or eventually the hurdle rate of one of the Bitcoin treasury companies. So in that sense, that's the way that we are seeing it. Also, as a private company, that we are ways to justify any kind of investment that we do through the exposure that we can have using some of the treasury companies. But obviously, it's a more risky game, and it could be a little bit difficult to justify if you have investors, as you, Marco, mentioned. But in the case of self-funded company, why not? Right?
Yeah, it's much easier. You have less, troubles from, kind of the information that you need to disclose, all the parameters that regulators, rightfully so, put just to, protect also, the investor base, etc. So for the private sector, yes, and it's also much easier because normally you have, maybe if you're like a smaller company, a startup, or even an established business, but on a private side in which you have very few founders, it's enough that you orange pill the founder, or it's enough that the founder understand the problem behind, and then the decision making and the process is much easier. You don't have to go to shareholder meeting, you don't have to convince the board, you don't have to do kind of the bureaucracy side of the public listed company. So yeah, hopefully so we will see more on the private side, we will see more on the small to medium enterprise, and it's something that is very close to me because in Italy most of the companies are small and medium cap. We have in Italy much more exposure, like 98% of corporation is like below, I think, 15 employees, or it's very small, and it's all from families or from founders. So hopefully it will be easier if they understand the struggle, if you understand the problem, to go faster into this new potential paradigm shift. So yeah, I would love to see more private side moving instead of this massive juggernaut on the public raising billions and billions and buy, which is amazing for Bitcoin, but I want to see more the grassroots from smaller enterprises as well.
Yes. And I want to bring something that we were speaking at the beginning, that is all this bad sentiment that you see on X regarding the treasury companies. Most people is frustrated because Bitcoin is either going up or at least not going down, and these companies are going down, and there is all this sentiment on X. I want to have your take. Is this sentiment, the bad sentiment, justified, or is just like people who don't understand the long strategy game of these companies?
Yeah, I think it's kind of, I don't want to say that it's the same because they're not, but similarly, the price action behaved like the altcoin, or like the kind of, when you have euphoria and you think that this specific company that has done an announcement is going to be unique, and then you don't realize all the other metrics like the BTC yield, the days to cover the MNAV, the capacity of the company to keep raising at this pace, the more money to buy Bitcoin. Inherently, with this kind of industry and with this kind of investment, you have most of those companies that will trend to an MNAV equal to 1, because it's like a gravitational force for those companies. So unless you really try to find a different way to raise capital, different way to establish yourself, most of those other will be successful. Yes, it's better to have Bitcoin on the balance sheet rather than cash. Yes, but share price is a different story. You can have like a 10x multiple, and potentially for those companies, they will never ever see even maybe a 5x. So if you bought in like the euphoria zone, man, that's painful, because you need maybe to wait 5 years because the company needs to have 3-4 times the Bitcoin and trade at the same level, because now they have an MNAV of 1.5, whereas maybe Bitcoin went much higher with less risk. So this space have been not bearish, but even in the in the euphoria phase, I was saying, yeah, guys, look, price are going too much vertical. You cannot sustain those kind of price action. Cooler was the ticker is KULR. I think was one of the first one company doing this strategy, and they skyrocketed from $6 to $42, and now they're going down. Now they're 4.5, meaning they completely erase everything. And it's painful because if you bought the dip at 30, at 25, at 20, at 15, buy the dip for me works only for Bitcoin. For the rest, it's a big uncertainty, and there is a degree of risk that you need to acknowledge, and it's more casino lifestyle than other.
Should we check on some of the data to support this?
That was my entry. I wanted to push Diego to bring the data and start talking about data.
Yes, please. I
Because
want to see your data side. Yeah.
I share the office with Diego. I'm most of the day with him at the office, and sometimes when I come with these comments based on sentiments, he said, "Come on, look at the data," and he share the data with me, and the data doesn't lie.
So guide me on how to do this. Is my first time. So screen sharing or presentation? Which one is it?
Screen sharing, right? Let me check. Let me double check. Screen sharing, yeah, because for presentation is for the plan that is higher on price, so we can do the screen sharing. It's similar to the Google Meet. The only thing that I request, when you stop sharing the screen, don't leave the conversation as in
it
Google.
Happens. So can you see now?
Yes, we can. Yeah.
Before going into that, let me check quickly on what we start talking before. That was the famous rectangle. So here we have the data or monthly data on Bitcoin from the beginning until today. And these are the returns of Bitcoin each month. As you can see, yeah, obviously rectangle is there for one reason. So it has there are only 2 months that when you average out all the data, they're actually having negative returns. One of them being September. After that, it's clear skies ahead, guys. It's October and November are the moon months. Anyways, I wanted to also dig a little bit deeper on this aggregated data by week to see if we can find something interesting there. And so this is the same graph as before, but accumulated per week. And you can see that for September first week is one of the worst in average of all the years. The second week is still negative, but from the third and fourth week, September historically have been positive. So, and I think we are exactly there in the second week. So I'm guessing from next week on, everything should look fine until the end of the year. So that's to clear up the thing about September being the worst month of the year. Now, coming back into by the way, do you have any doubts about this one or anything that you want to comment? Otherwise, I will go into
that's impressive. Only the worst month is September with minus 2.8%, I think, was it? And yes. All the other are like super green. I don't know. Find me another asset class that behave as beautifully as Bitcoin. I mean, there is none, zero. So
that's exactly the point.
That's a great marketing way to say right? Bitcoin is superior.
It's also a good element to zoom out. When in doubt, zoom out, check the data from a distance, and you don't have anything to worry about. But let's see what's happening with strategy. So here we have 2 different price prediction charts. Let's start with the easiest one, which is this. I'm going to start by removing everything and keeping the strategy price, and then we will add up the other ones. So this chart is log scale on the price and linear on the time, which also I like mostly because it removed that bias on when you're looking the chart on normal scale. When you just log it out, everything looks a lot smoother and it's easier to understand the trends and everything else. So the first point that we can extrapolate from the trend in MicroStrategy, that's the exponential trend when you follow the MicroStrategy price. We are right now over here with the price. The last data for this chart is September 11, so that's Thursday, I think. So the price there was 326. But according to the exponential trend prediction for the price, we should be by now around 580, 590, which means we are below trend. So the question is that normal? Is this happening because of Sailor is doing something wrong, because the markets are crazy or with bad sentiment, or it's just another normal flow of the data? If you look back, for example, over here, October 2023, we were pretty much down the train as we are now. And 3 months after that, we reached the train, and 3 months after that, we were really on top of the train. So that's why I usually don't worry with these short-term predictions. Like, it's very easy to get confused when you look at the price of MicroStrategy 5 months ago. I think it was around 400, and now it's 320, and you say everything is going to ship. Zoom out, check out the trend in a more objective way, and see that this is a normal trend. There is not much to worry about. The other thing that we can extrapolate from this one is, where I'm going to lay out also the Bitcoin price, which is that price of strategy pretty much correlates to the price of Bitcoin when you zoom out. If you come back again to what's been happening in the last months, yeah, it looked like there is a trending down from here to here compared to the Bitcoin price. But does it actually look so catastrophic as people might think? Or it's just another fluctuation on the overall trend of a long-term asset evolution? To me, it actually looks pretty normal. The other thing that we can extrapolate from here is the red line shows what would be MicroStrategy price if the MNAV will collapse to 1. So I will hover over the last day of data, and it shows that if MicroStrategy would have reached MNAV 1 this week, the price should be 250. In other words, what I meant to do with this analytics is to prove that this would be pretty much the bottom. Obviously, yes, the price can go below NAV 1 for sure, but not for long. Indeed, it happens that to MicroStrategy around these years, the price went below the MNAV 1 trend, but eventually it will pop up naturally as gravity pull objects down to earth. It's natural that you can call the bottom of the price MNAV 1. Technically, what a strategy would do if the price of a strategy falls down the MNAV 1 is you can start buying back your own stock to pull it back up. So it would be a very easy way to control the minimum price that the stock can reach. So based on that, this is obviously my own personal hypothesis, not financial advice, so it's not even proven, but it's just my interpretation of this. Now I can also draw the trend line of the MNAV 1. Why would that be useful? It's because now I can predict for myself what could be the minimum price of strategy if the MNAV, worst case scenario, MNAV collapsed to 1 by September 2026 in 1 year. And according to this trend, the minimum price will be 700. So even in the worst case scenario, if strategy keeps doing the same strategy, accumulating at the same pace, Bitcoin yield, the worst case scenario will put us there. We also draw, just for exemplification, what would happen if the MNAV will come back up to 3, which I don't think is likely at this level, but eventually this will serve as to show what would be the channel on where the price can move, right? So red line is MNAV 1, and the purple one is the MNAV 3, which means if everything follows the trend, the price on MNAV 3 would be 2,000, on MNAV 1 would be 700, this in around 1 year time frame. Then we can also see the blue one. Let me remove some of the other lines for clarity. The blue one is the actual MNAV trend. And this is the only thing that it's a little bit worried about it, because you can see how both lines, price and the blue line, the MNAV, have been widened from the times over here to the times over here. But eventually, nothing tells me that in a few months, in years, this trend can revert for some reason and come back on trend. So it's not much to worry about that. So
Yeah, that's a
this
great
one,
yeah, lovely. Yeah, great.
this one is only predicting using price data. Now, the next chart that we do is try to have a backup plan on how to predict this. And this one is a little bit more complex because it's not based only on strategy data, but it's including this algorithm is including things like obviously the Bitcoin price, the MNAV, the Bitcoin yield, the BTC CAGR 4 years, the Bitcoin volatility, and the Bitcoin per share. So we put all of these data that we think they are important in moving the price action, put it in an algorithm, and make it predict the trend using a Monte Carlo simulation. The difference with the previous one is, first, that it involved many other variables, not only the price. And the other one is that we run into a Monte Carlo simulation that, for short explanation, it could be something like living 1,000 lives in different universes. It will run possible trends in different scenarios. So you get all these green lines showing a maximum trend, a minimum trend, and the average it down. So using this algorithm, if we go back again to the 1 year prediction, we can see that on the average, on the white line, we are having a stock prediction of 676, which is pretty much in line with the trend of the MNAV1 here, which was 700. So you see, the way I use it is to have, from 2 different angles, a level of understanding of what could be a baseline for the price. The other thing that this Monte Carlo simulation show you is that it actually can go up as high as 5,000, or it can go down as low as 96,000. But what is important to understand is that on the trend, the dotted white trend, this is where the most probability occurs. So that is, it relates to the Gauss belt, where the middle area is the 66% of the trend. So that is representing the white line. In other words, there is a 66% chance that the price actually fluctuate around this price. It doesn't mean it's going to be 721 as it says there. It means it has 66% probability of being in that range. But there is still a 5% probability that the price eventually jump into 5,000. That's what Monte Carlo simulation beauty adds beauty to this calculation, because it will add up all the extreme cases. But also you have to understand that these are lower probability scenarios. So that's pretty much it. We can play around with these ones, for example, with other stocks, or changing parameters like the MNAV. What happens if the MNAV of MicroStrategy actually jumped to 3? and the Bitcoin CAGR goes to 50%, let's say, keeping the old parameters the same. See, now the prediction change because now you have data. And by the way, all of this information is updated dynamically, which means if for some reason in the next month the Bitcoin price jump to 500K, all of this data will eventually readjust to the new price point data, right? But that's mostly all. I don't know if you guys have doubts or you want to play with some other stock to see how it looks like. We have here also, let me check. We have Smarter Web, Satsuma, Metaplanet, Mara, DDC, and the blockchain group. The problem with the other ones is that we still don't have enough data. All of these companies, I think the biggest one is Metaplanet in terms of data. They might have something like 8 months, but all the other ones are really in early stage. So whatever that we draw here is really early stages of data computation, but it can give us some ideas.
Yeah, I think it's great, and I really like the fact that you have the two different approaches. So the first one is based on the pure data that we had, historical data, to lay out the different trends and to see potentially which is the trend line if the MNAV is 1, which is the trend line if we go back at 3, and your explanation is great. And I really like also the Monte Carlo, because the Monte Carlo is forward looking. You put like inside the algorithm a lot of cases, like 10,000 simulation, and the system is like eating alive all the inputs and putting out all the outputs, and then you can smooth out, as you said, and using this trend line as a probability measure of a certain outcome in the future to occur or not. So Monte Carlo is great, and having this visualization is amazing, because it's all about probabilities. It's all about statistical measurements, and the more data points we have, the more statistical data that you can factor in, the better. And yeah, I think it's kind of normal that we might now suffer a bit. We are a bit below, the usual MNAV that we saw on strategy, but overall the theory is the same, and we are facing Bitcoin at the lowest implied volatility and the lowest 4 years CAGR for Bitcoin.
Exactly.
And it's, for me, yeah, it's normal that a levered play with like Strategy or other companies that monetize volatility, that exploit volatility, are suffering a bit, because it's Bitcoin is so volatile normally, but not in the last 6 months. So my
Right.
next point is what we should expect in the next 1, 2, 3, or 4 years. Bitcoin to be now as stable as gold or as stable as the S&P, or we do still believe that we might see some volatility spike? Because if we see volatility spike, Strategy will be the first one to be monetizing it, to use it at its own advantage, to let the MNAV run, and to use all the other preferred offerings to accumulate more. So I think Strategy is suffering, Metaplanet is suffering, and all the system is suffering because it's historically one of the lowest for the implied volatility and the 4-year CAGR. And for me, it's not sustainable forever. Maybe for the next 3 months, yes. In 1, 2 years, I think Bitcoin will jump back in volatility. So
Yeah. So exactly, and for the volatility, we can come down to the power law. By the way, all of these charts that we create are not my creation. They are inspirations from a couple of guys like Giovanni Santostini and Matthew from Porcopolis. These guys are the inspiration to recreate these graphs, because we wanted to actually check the information from ourselves based on Bitcoin, traditional Bitcoin ethos, don't trust, verify. So we recreate the work that these guys did. And by the way, they have way more data than ourselves here, but we use it as just to prove and maybe give it a different angle to see what we can add to this discussion. In terms of the power law trend for Bitcoin, which is amazing, is hard to explain for people who don't. We are not so used to statistical analysis, but this chart, as you see it, is an anomaly in terms of stock market. It is totally abnormal. It doesn't happen. That's one of the other things that we believe Bitcoin is special. And it's not because I think it is. It's we can mathematically measure why Bitcoin is special. So the Power Law actually measure here how well is the fit to the real trend. And it's this R square meet the fitting of the Bitcoin price action to a Power Law in 96%. I will show you later with any other example, this doesn't happen. It doesn't happen in any of the stocks. It doesn't happen in any of the shit coins. That's why we believe Bitcoin is a special thing. So coming back to Marco, your question about the volatility turning down, you can see it on the graph here, the times where volatility were really spiking, where, for example, here in 2017, where we have this blow off top, here in 2013, even in the spikes of 2021. But now from, what is this, 2022, 2023, we see that the price trend of Bitcoin is approaching the Power Law and is following almost perfect. There is no blow off top, there is no bigger dip from here. That also is reflected in a decrease in the volatility from the 100s that we had a few years ago to probably now it's around 50 or something like that. So it's reflected here. The other thing that I wanted to show on this graph, which is also coming from Matthew from Porcopolis, let me move things ahead, are the two reddish lines that are on top. So this is actually the prediction of the price of Bitcoin today as if you would be in July 2016. So in July of 2016, with the information that we have from 2010 to 2016, the Power Law would have predicted that the price of today would be 118K. How far ahead are we? Isn't that freaking amazing?
Insane, impressive, yeah.
Right? And with the same power trend, we also can predict, okay, what would be the price in 2030? So the Power Law will predict at this point something around the 800,000 to 600,000. Obviously, it did move because along the way, the price of Bitcoin goes up, goes down. So that trend lines will be a shafting. But if you follow it here, you will see that it's being smoothed out in time, and it will be smoother and smoother and smoother on time, which means the price prediction will be every time more accurate. And if you go here, the price is still being predicted for today, 123K, 126. You see, for many, many years, many data points, the price prediction remains solid around there. Even during this time where we touched the biggest crash of Bitcoin of the 2022, with Bitcoin price at 16K, the Power Law still predicts 127K for today. So that's the miracle of the Power Law. So that's to me, well, it was the first time I saw it, it was mind blowing. Sorry, Marco, tell me.
Yeah, no, just to add, because it's great. And I mean, I follow also, the work from Giovanni Santostasi and Matthew. And when they came out with this idea, regardless who was the first one, the second one, the third one, I mean, nobody cares at this point. But seeing a statistical regression for people that are not familiar with the, data set, etc., might be, a number. But for people that look for data, study data, work with data, etc., and do regression, do statistical activities on big data set, having a regression at 96% accuracy, it's crazy, because normally when we do this kind of work on other field, maybe you are satisfied if you see a 80, 82%, 85%. Exactly. Above 90 is almost never, and 96 it's for real, almost 100%, means that this trend is real, that of course we can oscillate up or down to this trend, but eventually Bitcoin, because it's based on math, on physics, on energy, and is the most transparent and is the most traded asset globally without external interference or without external manipulation from central banks, etc. We see the most pure performance and the most pure broad-based knowledge of the asset. That's why the regression is so accurate at 96. I'm sure if you do the same activity with another stock, maybe you will find 78%, 80%. Why? Because most of the time you have, maybe sometimes you have stock when they move too much or they go too much down, they got halted by the central authority, say, look, there is some, anomaly, we stop trading, we halted trading, we modify, or there is a lot of speculation or a lot of insider trading that modifies the behavior. On Bitcoin is much more complicated. So I think this is a beautiful representation why Bitcoin is unique.
Exactly. We can play around a little bit with some shit coins and some other stocks to prove the point that 96% shouldn't have been taken lightly. It's a big, big fucking deal. So let's say I'm having with Ethereum. There you go, 34%. This is absolutely no prediction possible to do on any shitcoin. If I put, let's say Solana, some of these might maybe get better, I guess. 66%.
At 66% only from 2020, I see from the data, no? So it's much less time frame, much less, because from 96 to 66, it's totally different. And again, it's Bitcoin was from inception to now 96. It's completely different kind of asset. Yeah.
Let's check it out with some stocks. I think the one that we saw more close to a power line was Meta, but still far away. Meta from, let me reset this. There you go. So Meta is 78% power law, still not that good, but comparing to other stocks, this is the closest to a power law. And we were thinking about what could that be? Is it because it's also a network? So that's another open question that we have. We can also speculate with the exponential trend. For example, most of stock will follow an exponential trend, which we can also show here. Amazon has a 77 on the power law, but on the exponential trend, it could be 90%, which is pretty good, actually. From 2012, Amazon have shown 90% correlation to an exponential. So somehow I could be more confident on doing predictions on stocks that are probably fitting an exponential curve on something that is above 90%. The only thing that it's concerning is that all of these exponentials are not sustainable. You can see that they change on trend drastically from time to time. You can see also with gold. There are times where, for example, from here to here, you can see that there is an exponential trend with this slope, but from here to here, there is another slope. So it means something changed at that point, and the trend, the slope of the exponential totally changed for external factors, or who knows why. So they're usually not that sustainable as the power law. The power law is more related, as Giovanni explained it, to natural systems. So that's why they are more sustainable on time, and they actually grow faster. So even though you see an exponential here, Amazon is not growing as fast as Bitcoin in an exponential, in a power law, sorry. So yeah, that's pretty much it. I don't know if you guys have any other ideas about this or any discussion?
No, I think that this is very good to show. I showed a little bit last week, especially the trends with strategy, but now the explanation is super clear. It's super clear the two comparisons in strategy with the Monte Carlo simulation, and I hope that the audience is happy with all the things. And the conclusion of that is that the question that I was asking is really. It's good to be in fear now. No, the numbers are showing that all the things that are happening now are totally normal, are totally under the rational things of the price moving, and no financial advice. We can expect higher prices in the future.
Yeah, and I just want to stress again the 96% versus all the other things, because again we saw before with Meta, which is probably, as Diego said, one of the best representation because it's is a network, is a super unicorn, one of the fastest growing company, but still, compared to Bitcoin, it's much more centralized, it's much more manipulated, it's much more behaving in revenue stream. So with analytical data from analysts and other price point. And to me, I think stock are very related to the monetary policy of the Fed. Also Bitcoin, but stock probably even more. So the general sentiment is driven a lot by the US. Bitcoin is a more broader base. So you have millions of holder in other jurisdiction that they have nothing to do with the Fed, that doesn't even know about the Fed, and it's more pure. That's why it's 96, and the difference between 96 and 90 is mind blowing. And for people might say, yeah, it's only 6%. No, it's like one order of magnitude or even more refined and more accurate. 70 from 96 to 70 it's uncomparable. It's from a statistical point, it's not comparable. So 96 is what keeps me sleeping very well at night. That it's very solid, very solid.
Yeah, and it removes you from that trend that is, especially when you're on Twitter, people thinking about these short-term price movements, that they are not, you cannot even see them when you zoom out on something like that. For example, let's check the last dip that it was around here, March. There you go. April 6, we dipped to 79K. It looks like it was apocalypse, the end of the war. Zoom out and see where that point is on the train, on the power law line. It's not even nearby. Let me see if I can zoom out. See, it's still pretty close. So you also need to get used to the logs. The log scale will give you these big ranges, but it will also give you a much better perspective on price movement and not overreacting on things going down. Let's sell, totally unnecessary. That's why we always try to focus the attention on education on Bitcoin and a long-term focus on just stacking sats, have a long-term view. If you have a very long-term view, something like, let's say, one very good way to actually make people pay attention to this is talking about the retirement. So, for example, what will happen in 15 years, according to, if things keep on trend with the power law? We will have a Bitcoin at 4 million. So do you need to worry about Bitcoin coming down from 124 to 107K, or just look ahead, relax, and keep stacking sats? That's my only reference on this.
That's the I think that this is a huge conclusion. Don't panic with the short-term moves, because with the power law, with Bitcoin, and with everything, you always need to zoom up, look ahead, and again, I think and I'm sure that we are on the winning team. If you are on Bitcoin, you are on the winning team, and graphics and statistic, and as Marco said, a 96% correlation shows that we are on the winning team. Of course, no financial advice, but this is science. These are math, and math back all the things that we say. So I think that I don't know if you want to talk a little bit more, but I think that this is the longest episode of Bitcoin Treasury Company reports that started with just 20 minutes. And now probably I think we are going to be the full, someday the full afternoon talking. But again, I think that this is a good vision for people to see how to treat these assets, how to plan the long term. This is not a quick get. This is not a sprint. It's a marathon, and it's not a get rich quick scheme. This is a get ultra wealthy scheme, but slow. That's
And
that's
free.
that's the
Getting
Bitcoin.
free.
That's
Getting free.
getting free. So, guys, again, thank you very much for your time. Marco, your social media, please.
Yeah, only on X, but it's Toshi93 easy. So
Yes.
feel free to reach out.
And Diego, anything else you want to add?
No, I guess we can go deeper in some other episodes about some other analytics about the Bitcoin Treasury Company, because I think these are the less understood on the Bitcoin ecosystem right now. And we need to dig deeper on understanding all of these parameters, like what is the Bitcoin yield, what is the MNAV. Most people have no clue. Not most people. I would guess 99.99% of the population are outside of this conversation. So we need, even sailors say at some point during the earning call that not even in Wall Street these things are understood. So let's keep talking about it until it becomes mainstream at some point, and let's keep pushing forward with Bitcoin.
Excellent. Yes. Okay, guys, see you next Saturday. I hope on Saturday we can meet also Andrea or Andre here.
Yes,
So
yes.
and we have the two Argentinians against two Italians. It's gonna
The best 11 from Italy and the best 11 from Argentina, and discuss also for that one.
Well, we are not going to make jokes about 1990.
No. But the funny thing is that, of course, I will say that out of the four, there are two that like pineapple pizza, and there are two that hate pineapple pizza. The funny thing that is one Argentinian and one Italian that
I am
likes,
with
and one
Diego. I am with Diego because I know you, Fernando, you love it. So I am with
It's an
Diego.
So
abomination.
Yes.
last week we were two against one. Now they are two against me. So again, guys, thank you very much, and meet you next Saturday with another episode of Bitcoin Treasury Company Report.
Yep.
And thank you very much to everyone who is on the other side. If you like the episode, please thumbs up, subscribe to our channel so we can keep doing this content and educating people in all these financial things. Share this episode with the people you love. Share this episode with the people you hate, because we must reach 8 billion people in the world. See you in the next episode. Stay humble, stack sats, and remember, we are all Satoshi.